All right, my next guest says it's really all about the upcoming earnings season. Right now, this is keeping in mind, expectations are high, really high. We've had 6 straight quarters of double-digit earnings growth. And if you look at this table here, the street expects double-digit this year, 2026, and double-digit again next year. I want to bring in now Washington Crossing Advisors, their co-CIO, also portfolio manager, Kevin Caron. Kevin, so where are you? Like, it felt like this last earnings season didn't move the needle a lot. I thought it was just a magnificent earnings season. Now, I know we're not getting any sort of expansion in terms of PE expansion. It's been all about earnings. But if the earnings don't move the needle, what can?
Well, it's got to be the earnings.
Right.
But there's something else behind the earnings, which is that the capital spending that's happening, all this AI stuff you're talking about, that's feeding back into the economy and creating the earnings. So you've got a cycle that's involving credit, that's involving business investment and capital spending, that's feeding the earnings, which is reinforcing investor enthusiasm, which is holding the whole thing up. So valuations may be stretched, but the bigger thing is that this whole dynamic, this nexus of credit and capital spending and AI all holds together. So that's what we have to watch this season.
All right, so let's say it all holds together. It seems to me, though, the other variable, and what a lot of people were counting on coming into 2026, is the Mag 7 not doing all the heavy lifting, right? Year over year, consensus bottom up 15%. A lot of that would be coming from the 493. In 2027, 17%, a lot of that would be coming from the 493. Is that possible? If we get more ships sort of helping out here, does it make you feel more comfortable?
Well, a lot of it's already been discounted. So this being the 6th consecutive quarter of double-digit growth, these numbers are already out there. The growth expectations are very high. This is going to become a question as not just delivering the number, but exceeding the number. And within it, there's going to be a lot of dissecting the messages. So which companies are going to be able to take advantage of AI investment? Which ones are going to be the victims?
Let's talk about valuation. Everyone's kind of, all the purists, not long ago, the top line in these ranges, the dot was on the top line. In some of these cases, the dot was above the top line in terms of ranges. We've come down obviously a lot, still somewhat expensive, again, according to the purists, but we're starting to come down here. How concerned are you now at this point with valuations? Because it's sounding like that you think earnings have to really, really be spot on or better than spot on.
Let's talk about this chart. So this is 20 years. So 20 years is going to include a very deep recession. It's going to include COVID. It's going to include a lot of things here that are not relevant in an expanding economy, which we have now. And number two, when you look at what you're paying for, the profitability is much higher. So you would expect to have, in a market where profitability is higher than it was in the past, that all of this would be skewed higher. So it's not so much the level of the PE,
right.
It's really the earnings dynamic holding together in the face of what could be more difficult comparisons.
I started the show talking about moats. I saw a piece from Shamat where he's talking, saying essentially that AI possibly, what if AI makes every moat temporary? Is that really where we are anyway when you consider creative destruction? Isn't at some point every company assailable?
No, because if you look at businesses with a lot of physical infrastructure, if you look at businesses that depend upon distribution networks that have been entrenched for years and years that AI just can't create, those kind of network effects, try to switch from one platform to another. But if you have a company whose proposition is we're just going to be smarter than everybody else, those companies could be in trouble, but not all businesses, no.
I know you're looking for quality. We're going to put on the screen some of your things that qualify as quality: low debt, profitable assets, consistency. But let's look at your picks because we're running out of time, and I definitely want to share your picks. You had a bunch of them, but the core picks: ITW, Cummins, Microsoft, and Alphabet. Let's go to Cummins. Cummins has been one of my favorite names for a long time. Why now?
Well, the stock's gotten expensive. You might want to add more on a pullback, but as a core holding, Cummins is second to none. It is just the dominant company in terms of moving America around. So energy, transportation, Cummins would be your go-to stock for a long-term play.
ITW?
ITW, much of the same thing. What they have done in terms of developing their business and into automotive, especially into play into China and electric vehicles in China, very strong business.
All right, and you're calling Adobe a controversial pick, or you got a downgrade this morning from a well-known firm. It is in a hell of a downtrend. You're picking a bottom here. Why?
So look at this. Look at this and many other businesses like it. It's a technology business. Basically, what do? They stay in business because they have a lot of cash, very little debt, lots of cash flow. Try to kill a technology company. It's hard to do. This business is going to go through a transition for sure. But I am a long-term user of Adobe products.
Right.
You tell me that I have to give up Adobe and I have to call and talk to the people on the team that work with these products and try to change out the formats and the way that we work together. Forget it. This is going to be very hard to change. So
Right.
those would be network effects that are very durable. I think that this downdraft is overplayed, and ultimately it's a quality company that survives, not easily assailable.
All right, well, that was on the list, the customer switching cost. Good stuff, Kevin.
you,
Appreciate it.
Charles.
Thank you.